Good morning. It's Wednesday, May 21st. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. So we got a risk-off day here going in the U.S. equity markets, meaning risk on for the gold market as traders are seeking some safe haven demand. We're also seeing some animal spirits come alive here in the industrial metals and in the base metals as well. If you get the chart pack, platinum reached that upside target that we identified. Copper and silver attempting to break out over that downward sloping trend line that we've also identified, and gold bouncing off support. We've got U.S. equities failing at the resistance level. These are all identified in the email, and if you haven't done so, please register in the link in the description below, as we are going to start sending out this email every single day with the chart pack, and we're going to build on that with some of the other markets as well. So let's check on some of the top headlines, the market moving price action here, and some of the overnight headlines. So U.S. stock futures, they are declining after traders are nervous about taking on more risk as House lawmakers debate on the tax cuts. We've got oil futures climbing about 1% as of this recording here, and reaching about 1.5% here on a report that Israel may be preparing possible strikes on Iranian nuclear facilities. We're seeing the dollar index come under pressure. It's the only currency here in the red here as of this recording. And then finally, you do have treasuries falling, the Swiss franc and the yen both advancing, and investors are questioning whether or not the recent stock market gains can be sustained. We saw UK inflation surge more than expected to the highest rate since January 2024, and households are hit by a raft of price increases. So traders are paring back some of those interest rate cuts there on the British pound, and that's why you're getting the euro currency and also the pound both rallying back up. So looking at the equity side, we do have Morgan Stanley raising its call on U.S. stocks, writing that the S&P 500 could reach 6,500 by the second quarter of 2026. They also see the dollar index continuing to weaken, and they're paring back some of their economic growth outlook here. So economic data here, we don't really have any coming out today. We got some retail earnings coming out by guys like Target. Then we got Snowflake and Zoom, both expected to report after the close. We've got Richmond Fed President Barkin and also Bowman are going to participate in the Fed event. So looking at the precious metals overnight here. So you got gold futures up $31 at $33.16. That's about a 1% move here. And gold is rising at its third straight day here. You got jitters over the impact of some trade tensions with the global economy. You also got some geopolitical news coming out here with the Middle East. So we've got it gaining about 2.5% over the previous two sessions, and it comes after the worst week we've seen since November. So that we got that new catalyst here with Moody's, with the rating stripping of the U.S. Of its top credit rating here, some renewed concerns about the budget deficit, prompting some traders to go back into the gold market. So we look at that upward sloping trend line here again in the chart pack. Market kind of bounced off it. Now we're starting to turn up, and it looks like 33.50 to 65 here could be in the cards here as your next resistant point. It also comes as a downward sloping trend line. If you take the all-time high, you take that previous high that we saw in May, and you connect those two, and it'll come out to about here, about the 33.57 mark here. So looking at platinum, and platinum is the animal spirit that I'm talking about that broke out to the upside. And it's platinum breaking out after recent data showing that demand in China is surging due to a change in consumer jewelry preferences. So basically what's happening here is that you are a tourist or somebody that goes over to China, you want to buy, some jewelry here. Typically what they go after is they go after gold. The problem is that gold futures and gold prices are way too high. So what they're doing is they're looking at other alternatives. And what happened is they bought a ton of platinum. So you see China, they're the world's largest consumer of platinum, and their imports in April rose to the highest level in a year. So it's the shift is the decline in gold jewelry sales due to the high prices here. And basically, if you look at some of the data that comes out, they say that there were low inventories of both platinum, and what's happening is it's creating this squeeze on the market and a physical squeeze. So all the above ground supplies are being consumed because of this renewed growth here in your jewelry supply. So you already had low levels of inventories and things like that, and that's where you get the animal spirits here coming alive. And what it's doing is it's looking at other outside metals as well, because palladium is another market here that has relatively low supplies above ground, and that is also something that people will consume from jewelry demand, and the same thing with, of course, the silver market. Now you look at the exchange traded flows here, they did cut some of the gold holdings here, about 37,000 troy ounces, fourth straight day decline. So as the market comes up, people are definitely lightening up here a bit on the gold market as far as that data comes out with exchange traded funds. What they're going into here was the US equity markets, but now with US equities breaking down a bit, we'll see here if the support levels hold on the equities, or do they continue the rotation here into other base metals and industrial metals. So you look at the silver market, they added a big jump here, about 2.5 million ounces of holdings in a previous trading session here. So you look at the year-to-date percentage change here, you got gold up 6.1%. That's unchanged, but you get silver, big increase, 0.3% to 2.7%. Surprisingly, the gold-silver ratio still holding about 99-1. That important low was that April 23rd low, 97-1. I really believe that we'll start to see that ratio break down quite a bit here. And realistically, if you're going to look and track some of the industrial metals, you should look at like gold versus platinum. You look at platinum versus silver, platinum versus copper, and things like that. Now, copper futures have been range bound, but bouncing off that critical level of support, about the 460 to 50 level. It's a wide pocket here, but there are the micro futures, which makes it easy to scale in and scale out. Markets had come down to that. Now they're starting to retest some of the upper boundaries of the resistance, like 472 on up from there. So looking at some other things here, we do have crude oil futures. They rose after a report that CNN suggested that Israel is preparing for a potential strike on Iranian nuclear facilities. A lot of people are looking at that 63 to 65 as a resistance point. Market got up into that level here. Now you're starting to see some of the people that were long buying, the dip buyers, they're coming in here, and also some of the short sellers are coming in. So it's a bull-bear battle line from $63 to $65. So the potential strike has increased geopolitical concerns. That's why you're getting a bit of a rally here in the gold market. You're also getting a bit of a risk off here in the U.S. equity markets. And then the situation obviously adds the risk premium, the crude oil prices, with an unknown outcome. Now, one other market that we've been discussing recently was the wheat market. It had a massive gain here yesterday, jumping the most in 5 weeks on potential concerns that we are seeing crop conditions worsen in the U.S. We've got dry conditions here. We've also got a situation in China where their major growing area is under some serious stress here. So we'll see what happens in that market as well, but that's one that traders have been identifying and positioning to the upside. So other than that, you got Bitcoin just off just a touch here. We are trading the XRP, the Ripple futures. We've got Solana futures as well. So a lot of interest in those two markets. You got any questions? And also, if you're just getting involved in the futures markets, remember they have mini and micro contracts. So you can go down as low as a 1 ounce contract on the gold market. So if you have a much smaller account, you could start to look at positioning in there, build yourself up to the 10 ounce contract, and so on. And then on the grains, they've got 500 bushel contracts. They've got micro futures on the currencies. They've also got micro futures on the equity indices. And a lot of these markets, even natural gas is one, and that was the best performing commodity yesterday, up about 10%, saying that, hey, we've got some weather situations, we've got some supply situations. So you're seeing a big boost here in natural gas. Whether or not it can continue to follow through to the upside, that's another question going forward. We'll have to look, because we are scheduled to see a couple big builds here and get those inventories slightly higher than where we are at on the 5-year average. But again, there are mini and micro contracts on all these futures contracts, and the benefit of the futures well over the ETFs is that, one, it's a pure price play. There's 23-hour trading on most of these futures contracts. So you get the benefit of some of these overnight headlines here and are able to adjust your risk parameters, things like that, trail stops, etc. So you guys got any questions, send an email to info@bluelinefutures.com. Remember that futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck. Go get them.